Good afternoon and welcome back to our rainy day edition of Lunch at the Market. I'm Mari, filling in for Rachel, who is traveling to the World Money Show this week in Orlando, Florida, that we'll be covering live for you via Twitter. We'll also have our very own man on the street, Brad, on assignment in Orlando as well, handling the video, audio, etc. We'll try to bring you some live Ustream broadcasts as well, depending on the internet, Wi-Fi, and 3G accommodations. The iPhone can be pretty amazing when you need it. Just a reminder that the opinions expressed in today's Lunch at the Market may not necessarily be that of my own and may have been previously disseminated by Magnum Opus Financial. All of the content is general in nature and should be taken more like news and information rather than advice. As always, please keep in mind that securities may and often go down and you can lose money, especially when the president talks about banks on television. Please consider seeking the advice of your own professional advisor when making investment decisions before you buy. With that out of the way, here we go with today's segment. So far, so good today with the Dow approaching another triple-digit gain for the second day in a row. The month of January was hideous with the broader market average losing 3 to 5%, depending on which average you watch. Stocks have been under pressure as a result of all sorts of things, namely Washington's assault on Wall Street, uncertain regulation, and fears of financial weakness spreading out of Greece and possibly Spain. With the State of the Union address out of the way and the president getting back to work and off the television, we are seeing a bit of a relief rally. We want to take this opportunity to be the voice of caution here so that you don't get complacent. Remember, the same things that worried us last week during the endless down 100 Dow point days are still out there. They're just not being broadcast to us from the White House every day. True, we are getting good numbers as pending home sales and Ford auto numbers, along with some retail numbers, have given us reason to look on the bright side. But instead of running out and buying stocks today, we'd rather see you buy puts, which are now much cheaper given 2 days in a row of up trading. Use the rally to protect the stock you already have. We did some selective buying last week and encourage you to stay disciplined and have a longer-term memory past the last 2 trading days. Remember the pain of last week and sell some upside calls and buy downside puts like we outlined yesterday on our Lunch at the Market segment, and using options to collar your long stock position. Don't forget that optionmonster.com today is doing an options academy on collars right now, so jump on over there as soon as this is over and check out their webinar. Also, John Naharian is doing covered calls on 2:30 Eastern Time on February 9th. The two strategies are very similar. The only difference is that a collar includes a put to protect your downside. If you're comfortable with your downside, you can always do covered calls or buy writing, where you buy a stock and write a call at a price you'd be willing to part with the stock to lock in your gain. If the stock never trades above the strike price, you get to keep your stock and the premium from selling the calls. It's a way to make money in a down or sideways market while holding on to your stock for sunnier days. That's February 9th, 2010. You can register for the webinar by going to www.magnumopusfinancial.com/tools and then select the Option Monster button on the left and then clicking on Learn More at the bottom of the info about Option Monster. From there, select the Education tab and go down to Webinars. That's it. Sign up for whichever ones you want. Also, you'll have the option to get the pre-market briefing alerts emailed to you. That's where we identified the upgrade to BlackRock that didn't get talked about on CNBC until the day was nearly over. So make sure you're not trading in the dark by signing up for the pre-market briefing alerts from optionmonster.com. Now on to some stocks for the day. Looking through today's winners, we see a myriad of names that we have covered before that are up big. Get out your pen and pencil or iPhone notepad. We'll give you a sec because we're just going to give you a list and then ask you that you go back and watch the previous segments of Lunch at the Market to get the original research. Okay, that should be enough time. Here you go. Electronic components makers: HPJ, MER, and A1. Restaurants: CPKI and BJRI. foreign banks, IRE and TD, building materials, HWD and LL, construction companies, FWLT, CADC, FLR, and CBI, medical biotech, OICO, ICXT, CPHD, and PKI. Diversified technology, CNHY, CIR, PH, and CR. Consider this a recipe book with a meat, pasta, vegetable, and bread section. Depending on what you want for lunch or dinner and where that fits into what you'll eat for the day, the above list is a list of recipes. Not everything will be appealing to you, so go through the companies and pick out the ones that look good and then compile a shopping list. The next time the Dow is down 100 points, see if you can pick up names from your shopping list on sale, just like you do when going grocery shopping. See, it's not that when we previously identified these companies we could call the bottom, and you know we're always committed to buying a stock lower to build a position on a pullback. In fact, we prefer it pull back after our initial purchase so that we can get a better price. It's nearly impossible to call the bottom in a stock, but if you build your position on the way down, you can get pretty darn close. Thanks for joining us again today, and we'll see you in Florida soon.